What is up, guys and girls, and welcome to DecDoesInvesting, the wealth, investing and finance channel. Before we start, I'd like to ask you to hit the subscribe button to join me on my journey, and also hit the like button to help me out with the YouTube algorithm. In today's video, I have a stock from the UK which could be potentially undervalued from my analysis, and a potential buy for growth in the future. In this video, I will give you some background information on the company in question, and then run over some fundamentals and analysis as to why I think this company is undervalued. However, I would like to point out that this video is just for entertainment purposes and should not be taken as financial advice. As always, you should do your own research before purchasing any stock, as your capital will be at risk. So the stock I'm going to cover in this video is Tate & Lyle, which has the ticker symbol TATE and is traded on the London Stock Exchange. Founded back in 1903, Tate & Lyle has a market capital of £3 billion and is from the food and beverage sector. Tate & Lyle plc are a global supplier of food and beverage ingredients to the industrial markets. It was originally a sugar refining business, but from the 1970s it began to diversify, eventually divesting its sugar business in 2012. It specialises in turning raw materials such as corn into ingredients that give taste, texture and nutrition into food and beverages. If we take a look at the 1-year chart of Tate, we can see that it was on a bit of a run up before the market saw a crash and was at its 52-week high of £8.01. Since the crash, it is well on its way to recovery, and at the time of making this video is trading at £6.69, which means there is a discount of around 17% to be had right now from these highs. Taking a look at shareholder returns, we can see that over a 5-year period, Tate has returned 63.4% if we include dividends, which outperformed its industry average, which saw a negative return of 14.6%. And this also beat the market, which only saw a return of 16%. Simply Wall Street and its analysts currently undervalue Tate & Lyle by 47.8% in comparison to its fair value, in which they give it a fair value of £12.81. This is calculated on future cash flows that the company is expected to generate in the future. This is a huge discount for a company like Tate & Lyle, and with the fundamentals I'm going to touch on, presents us with a fantastic buying opportunity. Looking at its PE ratio, we can see that Tate & Lyle is currently trading at 12.7 times its earnings, which is both below its industry average of 14.1 and also the market of 15. Analysing this, we can see that on paper, Tate & Lyle is currently undervalued in comparison to both its industry average and also the market. Now looking at Tate's forecasted annual earnings growth, it isn't too promising, and hence why it is now on a bit of a discount. It is forecasted to only grow its earnings by 0.2%, whereas its industry average is expected to grow 21% and the market 21.7% in comparison. This again is somewhat reflected in its forecasted revenue growth, in which it is expected to grow by 1.2%, whereas its industry is expected to grow its revenue by 4.9% and the market is expected to grow by 3.7%. However, the past performance of Tate & Lyle has been very positive, and as we can see, its net profits are up from the previous year, and profit and earnings have been steady in recent times. Looking at this past performance more closely, over the past 5 years, Tate & Lyle has grown its annual earnings by 23.6%, which smashes its industry average of 9.8% and over double that of the market, which saw growth of 13.2%. Over the past 1 year, however, is when the figures really get impressive for Tate & Lyle, in which they grew their earnings by 35.2%, which both dwarfs the industry average of 3.8% and also the market of 1.7%. Moving on to the financial health now of Tate & Lyle, it boasts a very strong financial position, in which its short-term liabilities of £508 million and long-term liabilities of £944 million are covered by its short-term assets, which is fantastic news for current and future shareholders. Looking at the financial health of Tate & Lyle in a bit more depth now, we can see that as of March 31st of this year, it had equity of £1.399 billion and had debt of £551 million. This gives it a debt to equity ratio of 39.4%, which is good, and also we can see from the graph this debt level has been decreasing over the years, whereas on the contrary equity has been increasing year on year. Finally, it must be said that Tate & Lyle's debt is well covered by its operational cash flow. Wrapping up Tate & Lyle, it is one of the few companies that hasn't cut its dividend, which is fantastic for dividend growth investors like myself, and also currently has an impressive yield of 4.42%, which is greater than its industry average of 3.5%, and this yield is also forecasted to rise to 4.6% over the next 3 years. If we analyse both the stability and the growth of this past dividend, we can see that this dividend has been consistent and also growing for the past 10 years, which again is fantastic for dividend growth investors, as this all aids in compounding interest. I would like to add that I feel like this stock is great not only for its dividend, but also has room for capital appreciation. So finally, looking at the security of this dividend, we can see that Tate & Lyle currently has a payout ratio of 56%, which is forecasted to rise to 58% over the next 3 years. This is pretty much the sweet spot for payout ratios, in my opinion, as not only does it show that the dividend won't be cut anytime soon, but also leaves plenty of room for growth as well. So that wraps up this video on my analysis of Tate & Lyle. Please let me know down below your thoughts and opinions on this stock. So if you've liked the video, please drop it a like, subscribe if you want to see more content like this. And if you've missed any previous updates, there will be a link to the playlist in the description down below, along with some other videos that may be of interest to you. And until next time, peace.